Welcome back to Stocklabs Market Recaps. We'll just go through the week that ended on September 17th, which was September option expiration. It was quad witching. And for the second week in a row, it actually turned out to be a pretty big down day for the market. So back-to-back Fridays were, I think, the worst days of the week. So that's a little something new and stuck out a little bit. But we had said from the week before last week that sort of this slow drip in the market with not much uh, momentum able to carry through one day to another was could just be a situation they just don't want to participate in for a little while. And really, if you just sat around all week, you probably did better than trying to um, play anything long or get yourself chopped up, day after day, which eventually gets frustrating and eventually makes you sort of make even worse decisions that sort of just end up compounding. So, if you just sit out and wait for something that is a little more concrete for you to act on, then, um, gives you a little bit better chance of success, in my opinion. So, let's just get into it. And the indices themselves, really, like the numbers themselves aren't horrible. They're just a down week for markets. I mean, the IWM Russell was up, a small amount, 4/10, and Nasdaq down 0.7, S&P down 0.8, 0.9. Gold got hammered, and bonds were up, but so like these numbers on their own for the week aren't like a horrible down week, but it's just sort of the price action and the drift lower in the market is sort of, I think, weighing on it's affecting sentiment more than it's affecting actual prices. People are getting more and more frustrated with the type of action that we're seeing in the market. And I'll just go to the mega caps that are the leadership stocks for the market, just because they're some of the biggest. And yeah, so Tesla had a nice week, up 3%, sort of bucked the trend of everything else. Microsoft up 1.5%, but it's been down for a little while. I mean, it's still around $300 a share. And then the rest, Google was flat, Amazon flat, Apple down 2%, which is on the back of I think last week was down 3 something percent maybe. I just trying to remember the number from the last recap. And then Netflix had a down week, but it's been trending up like for several weeks. So, just a little bit of a breather there. And Facebook down 3.5% ish, which is, I don't know. I don't follow this stock every day, but this 360 something seems lower than I've seen it in a little while. So, something to keep an eye on. And then by market cap in general, if we go to our 1 to 5 billion, okay, this is wrong. Hold on. We probably have some weird stock. Yeah, so whatever this is, we've got some sort of bad print on data. And okay, so up or flat, up 3 bips is nothing. And then 5 to 10 billion, down 33. And large caps, down 44. And these are down 0.17% for mega caps. It's kind of weird. And TerraCap's the largest, down 7/10, this is in line with, actually, I think this was the exact number from the NASDAQ. So yeah, I mean, all sectors basically down. The 1 to 5 billion was flat at 3 bips, and then you had down 33, down 34 for 5 to 10 and 10 to 50. 50 to 100 held up, down 2/10 in a week that the market was down, about 7 or 8 tenths is not bad. And then you can sort of see that the TerraCaps, the very largest ones, they just dragged the index down. They finished where the index was. So, sometimes you get those, a lot of times we've had those weeks where everything else was down and the $1 trillion companies were all up that week, and the market, it went up even though everything was down. So now you're sort of seeing a little bit of an opposite trend where the stuff under the surface is okay. It's not going up, but it's not getting crushed. But the index is getting dragged down just from the larger stuff. So just the nature of how the market's structured and what's moving in a particular week. So, cap weighted indices get dragged around by the largest capped stocks. I think we mentioned that before. Pretty easy to understand. Intelligence, let's see. So bullish S&P, bullish tech or NASDAQ, bullish oil. I think oil had a nice week. And bullish oil, bullish S&P, small cap energy, utilities. It's kind of a weird one. You don't really see this pop up on here that often. And Russia, which we don't care about. So, pretty broad, but kind of general too. It's just S&P, tech, and was there any just outright small caps? No, it was small cap energy. So, pretty general stuff. This doesn't give you like a lean direction, for sectors, because you just have bullish S&P, bullish tech, bullish energy, which is like, they usually don't all go up in the same, on the same run. Let's just flip this around. See what we got here. Okay, so bearish is SOX, which is a bear ETF. So bullish semiconductors. This is a bearish crude ETF. So this is a bearish Russell ETF, a bearish NASDAQ ETF, and a bank bull ETF. Okay, so looks like we can lean bullish on semis, bullish on oil, bullish on IWM, and bullish on tech, bearish on banks. So I don't know. I mean, it's all between the last one and then inverting the screen like this. It's sort of just, I don't know. There's nothing specific enough. There's nothing specific to really point at and say, hey, we can sort of formulate a game plan around this. It's kind of just like, hey, indices are bullish, and that's it. So we are, not much has changed in the price action for the entire month of September now. So the whole month of September has been just a sort of a drip lower. And I think what you usually get out of these is that, people are buying on the whole way down. So they're getting, generally people are adding exposure as they go, and it gets to sort of a point where it just becomes a breaking point. They're like, I've had enough. I mentioned that the price action has been frustrating, and that's just sort of how it goes. And then you get a real like capitulation day, and then the market sort of finds its footing. But generally, like I mentioned before, you might just want to avoid some of this price action while it's going. I mean, look at this. This is September 1st. Okay, so down day. This is then this is an up day, but really we closed below the open. This is one up day. We've had 3 up days all month, and all these down days are like closing. A lot of them are closing like near the lows of the day. So it just looks like there's liquidation going on across assets. So if you could imagine that people, you're buying in here, you're buying in here, you're buying in here, it's fine, it's fine, it's fine. Then you're, okay, here's another dip, I'll buy some. Okay, here I bought some more and we hammered, so it's going to go up. And then, oh, wait a minute, I'll just, definitely I have to add stuff here. And then, okay, whoops, no choice but to add more here. And then like, whoops, now I'm down here. And, you end up getting to a point where you've added a whole bunch of exposure and all this, it's still, not going your way. And then you really get like a capitulation, like I said. And then hopefully one of those days shows up sometime soon. And hopefully it's marked by something like a hybrid oversold signal, which we haven't gotten one since mid-July. So that's what I'd be looking for. And we'll see how the week goes. But I think no reason to change the game plan from last week. Just, take it slow. Don't do anything crazy. All right. See you guys.